All right, guys, welcome back, and thank you so much for being patient. JC and I have jumped on to do the much-awaited financial kind of breakdown, protocol health, everything. So I'll tell you what we're going to discuss. Lee had a prior engagement, so he's not available today. We figured we'd just knock this out because you guys wanted to see it, and then we could get a little faster into the migration and get everything moving, because I know everyone's ready to get this thing started again. So he'll be on the next one, but that's the reason for his absence. So let's see here. So what we're going to talk about is a bunch of things. I know you guys want clarity on a ton of stuff. One of them is the current protocol health and TVL. So we'll talk about that. We will give you some transparency and clarity on the issues that led to the pause, kind of all the stuff surrounding that. We'll discuss all the data compilation process, how we gathered all the data and really was able to come up with the numbers that we did. We'll talk about the protocol liabilities upon relaunch. We'll talk through some specific wallets, give some specific examples of how it's really going to work so you guys can understand how it worked for individual investors and kind of see what ROI people are really going to get, what the average person back and forth would be able to get. We've got some more extreme examples on one side and the other. And so most of you guys will probably fall in the middle. And we'll talk through all of our forecasting models, the epoch math, the profit formulas, all that type of stuff. So this should be kind of a long video. So, hang in there. And you can speed through it if you want, because it'll be all pre-recorded. But we'll try to talk through each segment and give as much clarity as possible, while also do our best to make it understandable to the average person. So I think we've done a pretty good job of putting the information together. JC's done a fantastic job of helping me break down the data in the most digestible way possible. So I think that most of you guys will understand exactly where we're at and why we've created the models the way that we have. So let's get into it.
Hey, Scott, real quick, touch on exactly why we're doing this video and releasing it early. Or I'll just say it since I'm talking. we decided that it'd be best to go ahead and release the video early, go ahead and get the marketplace paused, get the migration started, mostly because of me, because I want to feel much more comfortable that we can meet that October 1st deadline that we've put out, and a few extra days is extremely helpful. Sasha and I were talking about it, and that's basically from Friday to Monday that we were talking about it. It was like, that's really fast for a migration, for double checking data. And so we requested extra time to do this, and so we're going to get this done now. But on the plus side of that, as soon as we are comfortable and confident, if it is before the 1st, we'll go ahead and release the protocol before the 1st as well.
Yeah, I think that's the upside. I know there's a lot of back and forth in the chats about what's going to happen. There's a lot of unknowns. I think people would rather just have the numbers and the data than have us wait and, wait for the migration for a little bit longer. I think people are ready to roll. So totally fine with it. We'll start the migration sooner. And if we get it lit up sooner, like if it goes smoothly, like we think it probably will, then we'll just turn on the protocol. People will be able to go see their numbers, play around with the site a little bit, use the marketplace. And then when that next epoch comes, you'll be able to go get your payout for the pay period. So it won't change things too much on our end. It will just speed up the timeline a little bit. And I think ultimately that's what you guys want. So it seemed like the better thing to do. So this video will come out a little bit, a day or two faster than we intended it to originally, or at least when we reported that earlier, that it would come out on Friday and we kind of pause everything. We're probably going to get this thing out tomorrow, and then we'll pause the marketplace and everything at the same time. We'll be able to shut down, begin the migration, so we can really look at the final data and look at the numbers, spot check it, do some testing, make sure everything works. We'd rather just get this up and going. I know you guys probably feel the same.
And to be clear, at this point, tomorrow is today.
That's correct. Yeah. So we'll see. Yeah, we'll see. We're recording this the night before because we wanted to knock this out and be ready to go. Won't have time to do it tomorrow to be able to get the video out. So anyway, that's the context behind it. But let's talk through it. Let's talk through all the dirty stuff that you guys want to know, because I know the granular details is really what we wanted to come out with, and we just needed to get a little further down through the process. So let's talk a little bit about the current TVL and the protocol health and really where it sits right now. So after breaking everything down, obviously we're a little bit behind in the markets. There's a pretty big drawdown on the markets a couple of days ago. But where we're sitting right now in terms of actual farming TVL that's happening right now puts us right about $5 million. So about $5 million is farming. That was significantly higher 2-3 days ago when the market was a little bit higher. So if that swings back up, that could easily be right back up at 6. That is excluding the vault assets. I know vault assets were included in our prior total platform deposits number that were at the top of the screen. We have a lot of vault assets that have gone in there. We've excluded that from that number. Those are sitting on the side. So 5 million is about what we have farming right now. That's probably lower than most people had expected, at least prior to launch, based on what the dashboard numbers are showing. So let's just talk through some of the major issues. We've covered them a little bit in the past, but I'd like to get a little more granular on them. First off, some of them happened very quickly, and some of them happened spread out over time. So I think it's important to kind of discuss the context of how they happen. But number one, one of the big ones, our position in SwapX, unfortunately, did not go as planned. We got in early on. The team is absolutely amazing. They've done everything they can to be able to support that protocol. Unfortunately, the chain volume on Sonic has been very lackluster, much less than was originally projected it was going to be. I also think the chain support was significantly less. Let me pull up a chart real quick. All right, so here's just the chart on Sonic. As you can see, Sonic launched back in January, really right before SwapX came out. This is the relaunch of the Phantom chain. So they came out, they had a nice little spike initially on launch. It rallied, and then since then it's really done nothing but drain over time. I just don't think, it's down 68% on the year. It just hasn't performed very well. I do not think that the SwapX team was supported correctly by the Sonic team. So because we were invested heavily in SwapX and Sonic, and that entire chain basically is dropped about 70%. With us having such a large position in that, it certainly made an impact. The chart on SwapX is really similar. So as you can see here, when they launched, it hit an all-time high of about 80 cents. They had one more rally, and since then it's gone down, and now you're looking at about a little under 4.5 cents that's left on there. So because we had a significant position on SwapX, that made a significant impact on the drawdown of our total TVL that was farming on SwapX. So those positions that had really great APRs coming out the gate, those consistently went down over time to where the APRs were less and less, and it became less lucrative farming. Also, the other assets in SwapX, including the NFTs or the VE SwapX or the voting rights or anything like that, that were producing rewards at the epoch, were at a much higher dollar amount in the first initial months than they are now. All right, that's about all there is on SwapX. And we by no means are saying that SwapX is the reason that we struggled. We just had a very large position in SwapX. And over time, as that continued to draw down, we did our best to continue to try to support the team as long as possible, because we really thought they would have the ability to bring it back. I just don't think they were supported very well. So that's a multi-7-figure hit that happened over time that just slowly bled out. So very unfortunate, but that's just one of the factors that reduced our TVL that we actually had farming. Another one, as you guys know, is Sui. So Sui had the Cetus hack back in, I want to say it was, May? I believe at the time of the pause, you had the Sui price right around $4.20. Also on Cetus, the volumes were very high. It was very lucrative. So a large portion of the daily liability that we were earning was coming from Sui. So when Sui's froze, for one, that was bad. And when the volumes dropped off, it was difficult for us to make up for that portion. When it froze, as we talked about in the past, price was up about $4.20, and when it reopened, it was about $1 less. It might have been like about 308. So it's a pretty significant drop in overall value of the token price. When it relaunched, what we did is we decided to wait not too long before we relaunched Paca. And the reason was we thought that we would be able to make up for the impermanent loss based on the data we were showing from some of our other farming positions and some of those other numbers. So what we thought we were doing was covering pretty close to the liability, and that when Sui recovered, that we'd be back out in front of it in terms of total TVL that was farming, and we'd be well ahead on the daily liability that was getting covered. So we took about a $2 million impermanent loss on the drop, and that's just flat impermanent loss that we took on our farming position. That doesn't account for the money that they gave us back in Cetus tokens. Those Cetus tokens are spread out over a year, and so we get little bits back at a time. Cetus is significantly less than it was. I mean, Cetus peaked at 40 cents. It's now down at about 8 cents. And so that token value has significantly dropped as well. So our TVL our total farming TVL that we even have in here, even accounting for the future CETUS that we're going to get, has also dropped. So when that's accounted for basically across the board, these token values have reduced so significantly that it's a major factor for the TVL for us. So it's part of the reason our numbers are lower. I would say as CETUS unpaused and SUI started to surge back, we didn't see the volumes on CETUS that we wanted to. And so those percentages, those daily APRs that we were able to hit to cover the liability we were able to hit prior, were not what we could hit now. So that never truly came back. Even though volumes came back, I don't think that their payout rate is the same as it was before. So it made it very difficult to come up with the same dollar amount, even farming the same ranges with the same quote unquote leverage. It's not real leverage, but the same tightness on the leverage when you're farming on CETUS. So that made it significantly more difficult to be able to make up the gap that we needed to get our TVL back where it was supposed to be. And to reiterate this fact, at the time that we unpaused PACA post CETUS hack, running all the math of all of our positions, we thought our average daily liability that we were earning to be able to offset the liabilities that you all were claiming was relatively on par, to the point where we could relaunch, wait for SUI to come back in price action, and then we'd be back where we needed to in terms of TVL. But it turns out that was actually incorrect. We referenced this before about some of the mistakes Keith had made. What ultimately ended up happening, what we ended up finding, is Keith had been incorrectly reporting and calculating his numbers for at least 6 months. So what that did is that made a difference for the farming value, the calculation of the farming value that we thought was there, and then also the daily ROI that was producing. So in terms of how much his position was earning to offset the daily liability, we thought those numbers were much higher. In reality, they were actually much lower. So while we were struggling with some of our other positions, but we thought that his position was making up for it, it actually wasn't. So we were bleeding a little bit on the SwapX side, which was very gradual. The SUI position happened immediate drawdown with the impermanent loss, but then also really started to bleed in terms of the fact that it since it produced such a high daily ROI and a high percentage of the total platform's daily ROI and liability was covered by SUI. Since that went away, we really needed his position to be able to be covering the rest. And by the data, it looked like it was, but in reality, those numbers were not being calculated correctly. So we were actually bleeding for a long period of time that we were unaware of. All those decisions that were made, the business decisions were made over the last 6 months, were being done with incorrect math. And that's ultimately the problem. So the money, certainly wasn't being lost overnight. It was a very gradual scenario with that math being incorrect. And so the math was incorrect for at least 6 months. So over time, the total TVL total farming TVL was continuing to draw down while the liabilities went up. It wasn't until the day before the pause until I was able to figure this information out, start running the numbers and saying, we got to pause immediately. This is not sustainable. So for all the folks that have been asking, why would you run a promotion a week before you were going to pause if you knew you were going to pause? We did not know we were going to pause. We did not figure out that information until right before the pause happened. So it's very unfortunate. I wish that I would have caught it sooner, and I'll take responsibility for that I wasn't able to gather that math correctly before and do some additional spot checks and make sure everything was correct. We were taking a little more off face value. So we were not able to cover the liability at that point in terms of what the farms were producing, and there was less in the farms than we originally expected. So that combination of factors made a huge difference. As soon as it was realized, we shut the protocol down to assess the damage and figure out where we really were. So I know that some folks really wanted us to be able to get a quick turnaround on that. It took me a little while to be able to gather the data and feel like I was to the point where I felt very comfortable that the math was 100% correct. That's why there's been a little bit of a delay here. So I know that you guys have wanted some clarity on that, but there's some of the insight of exactly what happened. And in the end, we attached our cart to a few different horses that we picked that we thought would, carry us through the race. And we just attached our cart to the wrong ones. It's very unfortunate. So some of the assets that we chose that we wanted to go with, they didn't do as well as we thought they were going to do. Some of the platforms that we used to farm on, like CETUS, they had issues. We obviously had the calculation issues with Keith. So all those three factors happening at the same time and us doing math on numbers that were incorrect the whole time, that's what put us in the scenario we're in. So that's where we're at on the total TVL. Hopefully that's enough information for you guys to understand how we are sitting right at that 5 million mark right now. Again, market pops again to where we were just 2 days ago, and that's more like the $6 million mark. It's very important, I think, for me to say that we've made some differences to how we're doing our farming process. We've made some revisions. We've got a lot more clarity into those positions and the strategies of what we're going to do there. We've already discussed the fact with all you guys that the platform is going to be variable. So there is no how would I say, additional pressure to be able to meet a certain dollar amount and take any risks to meet a certain percentage per day. The variable rate will decide. So whatever the market produces for us on the amount that we're farming, that's what we're going to be able to turn around and pay out to investors. And so the system will work a little bit different. And of course, we'll give a lot more transparency along the way for that. So JC, did you have any insight on that or anything I didn't cover?
No, I think you hit that all pretty well there.
Okay.
As well as can be hit.
All right. So let's see here. So that's the first couple pieces of it. Hopefully that all made sense to you. I think what we need to discuss next is going to be the data compilation process, how we gather the data, how we made sure the data was as correct as it could possibly be. And then we can move into the next steps where we'll talk about what the protocol looks like or how those numbers translate over to the new protocol upon launch.
Okay, so Scott, if you'll throw me up on the screen, not my pretty face. There we go. All right, so guys, I put a post out, a few days ago, just talking about how we even got to our starting number for calculating that initial redemption value, right? Like it takes a number to start with and get there. And so everything that we have done starts with this Dune query that has grown and grown and grown. This Dune query works through all of the legacy contracts. It works through the original paca contract, the 8-bit contract, as well as this new contract that's on multiple chains. The current contract that's on multiple chains. So just to kind of briefly step through this and talk a little bit about how we're getting the data and what's happening. Of course, first we're gathering wallet data from every possible angle so that we capture every wallet on there. Then we come in and we grab raw claims, raw stakes on everything, on every contract. That's the current one. There is the V2 packet one, which is the one before the current one. And then we get in base and Sonic there. Then we get into 8-bit. 8-bit's what caused a whole lot of trouble in what we wanted to do. I mentioned this in that post the other day. Originally, the plan was to essentially rebuild every transaction on the contract for every wallet from scratch because that's really how I wanted to do it, just to get everything perfect. There were a couple of things working against us in that. Number one, 8-bit as a contract did not have a compound function. The compound capability on 8-bit worked as two separate transactions you had to sign, one that was a claim and then the next one that was an instant stake. And so one of the issues we had with that was it was significantly inflating the claims for anybody on 8-bit at all. And at the same time, we weren't able to properly line up numbers. And I'll talk a little bit more about that here in a minute. So again, we went through and got every piece of data that we could. I'll just skip down here to the bottom. You can see we've got the claims on BSC on the current, the legacy version 2, which was again the last packet contract for migration, and then the 8-bit ones, and then we create the total there, right? Then we've got our base and Sonic claims, our BSC compounds from all three contracts, and then the total. Then you've got the base and Sonic compounds. Then again, everything through here, all the different staking elements and things that could create a stake. We've got restakes on every chain as part of this. Those come in as a large factor in the calculation, which I've said several times in chat at this point. And so then we come up with our global numbers. The global numbers are honestly just for our viewing. They're not used in any way because we can't do anything globally. Everything has to be done on a per chain basis.
Global numbers, just for everybody, global numbers is just the total. It's aggregated total between all the other factors. But since you guys probably want to stay on the chains you were on, we're keeping everything separate by chain.
Yeah, for sure. And has to be. But like I said, we wanted to look at some things in aggregate just so we could help get better numbers together. And so that just aggregates the change from the data from all of the chains there. Excuse my dog barking in the background. I sound like 4X. Um, so one thing I really want to touch on, and it's 8-bit that forced us to do this, but in the end, the more we looked into it and talked with a few people in certain circumstances, we figured out that we had to fix this claim and restake issue immediately, because not only was that what was happening on 8-bit by default, so we couldn't not credit that properly on 8-bit. Even with the final math we ended up doing, that would have messed it up, because it would have set that user's claims extremely high. There was one wallet that showed $90,000 in claims, and then after we fixed 8-bit alone, it dropped those claims down to about $40,000 in claims, because what they had been doing, and again, we spoke with this person, what they had been doing was claiming, adding funds to that amount, and then restaking it immediately. And so we put in what we're calling fuzzy logic for inferred compoundings. Essentially, the way that we did this, we set up a 4-hour window. And if you have a claim, and then within that 4-hour window, you create a new stake that is 3% below the claim amount or above. So we gave a 3% threshold there. A lot of people like to go and just keep round numbers. I know we've got one of our admins like that, and I've talked to several others and seen some in chat say that. And so again, a lot of people were claiming just because they really wanted to see round numbers on their dashboard. And Compound, of course, doesn't create round numbers. And so this allowed those to be counted as they were intended, as an actual claim and redeposit, which essentially is a compound. And so what this inferred compound does is seeks out those transactions back to back and takes the claim side of that transaction and credits it back to the ongoing claims total. And so it essentially subtracts that amount from the claims total, giving that value back to the user. And so again, this made a significant difference overall when we added it, and affected a lot of wallets when we added it. And that's one of the reasons I keep saying in the chat, there's so much more to this formula. And we're going to talk about that formula in a few minutes and kind of go through some of that. But it was really important that we start with where and how all of the data was collected. But just to kind of keep scrolling through here, and I don't need to touch on every piece of it. This is just getting every piece of every action on the contract, all the way down to marketplace sales. We cannot get marketplace buys. There is no history data for marketplace in the old contract. And so that data is just lost. And because of that, we were not able to piece together. That was the other major reason we could not just piece all the transactions together, because it would never add up correctly without marketplace purchases. But so at the end of the day, we've got a 630 line Dune query that gathers all of the data, puts it out into this format for every single wallet across the board, so that we've got all the totals right there handy in raw format, ready for us to take things to the next step.
I think it's important. I think it's important too to mention the fact that we had the original 8-bit contract. We went through a migration to have our second contract, which is the first version of paca, and then we went through an additional migration. So we really have multiple contracts here where we were digging to find the correct data on each contract and finding the correct way to aggregate that. So we had the most valid numbers we could come up with. So I know that we've taken a while to be able to gather this data, but it was difficult to make sure. We wanted to spend the extra time on it to make sure it was as correct as we could possibly make it. And shout out to JC, he spent an immense amount of time on the phone with me, talking through if there was any missing variables to try to make sure we captured everything. We really wanted to be fair in the end, to make sure that we were giving investors as much money as we could and have it be in the most fair value, in the most accurate way possible. So we really spent a lot of time on it to make it as clean as possible. So hopefully you guys can appreciate the time it took to gather the data and try to make sure it was correct. And we'll discuss obviously the final numbers.
And I talked about in the post that I did make in chat. I'm going to make a series of posts after this video is posted as well, that details out a lot of what I've said here, and then what I'm going to say throughout the rest of the video too. I've already got all but a couple of them written up, ready to go. But this is absolutely a best good faith effort to get everything accounted for as fairly as possible. We really wanted to focus on that.
All right, let's go ahead and jump over to the wallet calculator. So what this is this is the nice front end version that we were able to make so we could display what the total dollar values are and actually look at the data. So we were able to basically code it in the back end. This is the front end, so it's easy to see and easy to read. The total global data for all chains had like a $20 million on the dashboard, 8.8 million in claims, 3.8 in compounds. We've got restakes, withdrawals, marketplace sales, all that. So we have all the data here that's pulling and aggregating so you can get a total bird's eye view of how the protocol was doing. The investor payback that will be our redemption value for all investors is the redemption value prior to the increased percentage is going to be 15.9 million. And then you've got 18.5 million that is included after the 20% that we're giving people for the additional upside. Now, there's a bunch of ways we could have done this. You know, some people were advocating for just pay us for the percentage of whatever you have left and then walk away, shut down the protocol, and that's that. There's certainly different ways we could have gone about this. And, we could have come up with the options that were extremely low and barely paid out anybody anything. And everyone could have shared the loss, and we could have just said, hey, we've got, we're going to pay out this $8 million to everyone. And some people are going to take major losses or just whatever dollar amount we had left. We didn't think that was the right thing to do. We think that there's a better way to fix it to where every individual outside of selling on their own or leaving the marketplace at a loss, every individual will at least have had the opportunity to make money in PACA. And so when we started to look at the right way to rebuild the protocol and rebuild it in the variable format, paying out on the epochs, including the percentage and all that, we wanted to do that in a way that would be super sustainable. So what was decided is if we could structure it around that model and get the numbers correct, we'd run it through a sustainability model, and we built 100 of them. And in a second here, I'll show you the one that we are going with. And we needed to make sure that the math jived with the sustainability model and that this protocol could work and not have really any risk of the protocol dying and people getting left out in the cold and losing a lot of money. So we'll talk through the method for which we calculated this number, because I think that's super important. We also have some specific wallet examples that I mentioned in the intro that we can go through, so you can kind of see what might happen to an in particular wallet depending on the dynamic of their claims and compounds and restakes and kind of how they navigated the protocol. And I think it'll give you a pretty good picture of what we're looking at. JC, why don't you go through, if you don't mind, for me, the calculation,
Sure.
dashboard.
First, I want to point out something kind of back to what I just said a minute ago about the inferred compounds. If you'll go ahead and click the standard at the top there. So this was the data before we added the inferred compounds. You can see that total final payback number comes to 17.7 million. And then when we went back in there and applied the inferred compounds, that jumped it up to 18.5 million. And so that's a fairly large increase that we put back there. Again, all in the name of a good faith effort to be as fair as possible about where and how we were allocating data. And so that just created a larger payout for the protocol and for the users. And it made a significant difference for a handful of users.
It did. I think across the board, I think once we run through some of the wallets and everything, you'll understand that the way we did it is about as fair as we could possibly make it, because every individual person has a very different scenario and circumstance. And so our goal was to try to figure out worst case scenario and best case scenario wallets. Was it reasonable and fair for both of those people on either side of the spectrum? I think we boiled this down to about as good as you can possibly get it. There's no perfect system outside of, us having the full TVL and us being able to continue to print at the higher rates we used to be able to. There's no way to turn back time and fix that. So with the circumstances that we had, I think we boiled this down to about the cleanest possible math that is the most fair on average for everyone involved in the protocol. Again, every single individual has or will have the opportunity to be able to make money in the protocol, which I think was super important to me. It may not be as much money as everyone wanted to, but outside of people taking their own exit and leaving early, everyone should be able to have the ability to be able to be in the black. And so I think that was a good consolation prize. People will be able to walk away with their initial plus funds if they write out the protocol. So it's super important. And the other part of it was, I mean, we could certainly round this number up and give everybody a ton of capital. It also needed to be sustainable. It's one thing to say, okay, everybody gets their dashboard number plus whatever, or we're going to be able to pay out such and such percentage. But if we can't meet that commitment and the sustainability model isn't almost 100% sure that you can, and the protocol ends or fails along the way, then we're in the same position we were. We're pausing and redoing the entire math or the way the protocol works. So this is a balance between being fair for all users on each end of the spectrum. Might not be perfect for everyone, but the most fair in that way, but also the most sustainable in that we can actually execute on all this stuff. And in the end, everyone will be paid out, and PACA can either close doors and, hopefully most people will be happy, or the model is built in a way to where it's sustainable, that if we ever want to do, version 3 of PACA and turn on new investment or whatever, try to get new capital, it's possible. It's just not the priority right now. But to reiterate,
will you touch very briefly on the newer users and the reason for us not just choosing the dashboard number?
Yeah. So the dashboard number obviously is higher. We could have just said, okay, that's the number everyone's locked into. That's what we're going to pay out, and we'll do that. Even with this, even on the epochs, and pay that out. A, it's a higher number, so it would put more strain on the protocol. B, it only benefited early users. So the earlier they were, the better. All the people who just got in weren't going to see any upside from the investment, and that to me wasn't something that I could live with. Right? We can't have your money tied up into the protocol and not give you some sort of reasonable return from it. So again, this is the most fair across the board that we could make for everyone in the protocol, and not not focus on only later users or newer users. We certainly could have gone, okay, if we look back at the numbers, we can come up with an approximate initial capital invested value that you had, and estimate what you invested in the protocol, and said, hey, we think you're past the profit threshold and you get to walk away. I know a lot of people who got in early were there and just cut everyone off and only address new users, but that wasn't fair to the people that were in the protocol initially and rode with us this entire time. And then it wasn't fair at all for us to not give any benefit to the late users who got in right before the shutdown. So this is the instance to where we can spread the fairness across everyone. If you got in the day before the protocol froze, it froze, you're still going to get 20% on your invested capital. It will be an okay investment for you, and you should be able to walk away with this relatively happy. It's not as high as you might have liked, but it's still a pretty solid return. You get your funds back plus 20% and you can walk. So the thought process behind doing the math and the way we did it is sustainable, and also it's pretty fair for the people who got in really late. It's also still good for the people who got in early, and in between, in the aggregate, it's about the most fair blend that we could find. So hopefully that explained it.
Yeah, I think that's good. If you want to throw my screen up, I'll go through and talk through some wallet examples and a little bit more about the formula that everybody has been waiting for. Okay, so I'm going to start by saying that yes, the formula is ridiculously complicated. It is shown here in an extremely simplified view because I built out a custom math notation for it and built out several custom functions that do a lot of things in the backgrounds, a lot of clamps, multipliers, things like that. I will go deeper into that. Really, that's probably best handled on a post. So looking over here at the side, this is actually a post that I am going to put out in Maine. And so I worked with ChatGPT, right? Because we all talked about how good ChatGPT is at just knowing. And obviously it doesn't just know, but I fed it a ridiculous amount of information, including the code in the background, to get this simplified to where it is viewable and easier to follow. And so the most important concept, like I said, it all starts with the way that we gathered the data, which we went through that so that we were making sure that we were getting everything fair. And again, to that end, that makes that claim number significantly different than what it could have been. And we saw that on the aggregate details there too. So the actual simplified presentation formula is, it starts with your dashboard number, okay, the dashboard that you see right now on the old side. Then to that number, we add your rewards at the pause level. This has not been captured yet. And so anybody that's like, hey, put my wallet in that calculator, no, because it's not going to be accurate. Because right now we're running this for our own math purposes to double check. We're using snapshot data and a bunch of other things like that to cobble the data together to get this to run. I've already written the migration scripts for this that will pull the data down, and we're going to end up resetting the contract just like we were unpausing, and then pulling all of data directly from the contract, and then applying the Dune data alongside that as well. But your dashboard, the original dashboard amount that you have, plus the rewards that you had at pause are getting put into there. Anything that you currently have listed in the marketplace is going to be automatically included back in your dashboard number as our starting point. Same thing if you had requested a stake for withdrawal, that with expired and requested stake is also going to be included in your dashboard. The way that we're pulling this original dashboard number already accounts for any expired stakes that had not been requested. And so again, really just making sure that we took every single position that any individual stake could be in and made sure we calculated that up into the dashboard number. From there, we get into the main event, the redemption value calculation. So our redemption value, at the core of it, it is truly dashboard minus claims times 20 times 1.2%, add 20% to that, and then you add restakes in after that 20%. Okay. So again, at the absolute base level, that's what it is. Dashboard minus claims times 20 increased by 20%, and then add the restakes. But again, in helping make things fair for people, helping not send somebody extremely negative, right? Like if somebody's dashboard minus claims put them below zero, and then we added 20% to that, that actually makes them more in the hole before we apply the restakes back. And we're going to look at some examples with this in just a minute too. But again, and I said this in the chat, we did everything possible to help everybody along the way not get just completely wiped out through this. And again, that started at the data gathering level to help offset the claims as much as we could there. And then again, that's what part of this formula is making sure that we're not applying that 20% if dashboards minus claims is less than zero. So that just stays at the less than zero number here. And then after that dashboard minus claims calculation with either with the 20% added on or without, then the restakes get added directly on top of that number. Restakes act like fresh capital. We had lots of discussions about this. I've actually seen several people discussing this in the chat without me, but discussing it, and they came to the exact same conclusion that we did. At the time that you decide to restake your funds, you are literally pulling that capital out of PACA, and then you are deciding to put in a brand new fresh deposit of that capital amount. And so in the interest of fairness, we did not apply the additional 20% number to that, but instead we allowed that to be a bonus on top of, and restakes make a significant difference in offsetting the claims as well. This is one area where we are taking care of the older users too, right? Like what Scott said, a lot of the decision on how we were going to take that value and do some of that, the newest users went into a lot of that discussion, and Scott was adamant that even when I pushed a handful of times, let's just pay the dashboard number and move on. He really felt strongly that the newest users did not need to be left out, where we're just sitting here earning with their funds throughout this recovery. And at the end of the day, they just get their original amount back. And I'm going to show that on this wallet as well. So there you go. So that's the formula right there. That kind of takes the entire thing right there. And again, I'm going to post this as it is in chat. And it steps through everything that I just stepped through right there. Probably says it much better than I did because I spent a lot more time on that, and I tend to just speak off the cuff. All right, so let's look at this wallet. This is a newer wallet. This user came on board, would have been mid-June that this user came on board. Their initial deposit amount was $298,000. So we can see that they compounded that up a little bit to get over 300 in there. So their final dashboard ended up being at $303,000. Then they proceeded to claim a lot, right? And so they claimed out 28,000 of that. And so I'm literally just going to run through this. And this is a very basic scenario and one where napkin math would work, right? Again, there are times when the napkin math works. It's just too hard to know if your own wallet falls into that category or not without having it run through the data collection. So this wallet
Yeah.
has no restakes, no withdrawals, no marketplace sales. Scott, you got something?
Oh, no, I was just gonna follow up, and this is why in the chats, JC's been adamant, like, don't just make the assumption that your napkin math will work because of all the different variables. And so it's here's a really straightforward example that where that works. If you start adding in the other variables, it may not work. And we certainly didn't want anyone to do something that was to their detriment because they didn't have a full picture. And again, that's another reason why getting this video out early is going to help so we can just move forward into the protocol. But
And
anyway.
perfect example to speak to that. Somebody last night we all saw was buying their own stakes on the marketplace. And yes, we noticed that and have a tracker for things like that. But in the end, they did not benefit very much for it after the value loss of selling to themselves in the marketplace. And the biggest reason is restakes. They were trying to do their napkin math, decided that was a good idea, but the value that they had in restakes along with that made it so that they were not getting themselves ahead very much at all. They may have gotten ahead just a little, but not enough to make it worth it for that time. And again, I'm not even 100% sure in the end. I did not go back and run their numbers after that. I just looked at their wallet as soon as they sold their first couple of stakes, and I saw that's what they were doing. Came in here, looked at it. I said, well, that's dumb. They've got a ton of restakes in here. And so
Yeah.
again, I tried my best to warn people not to do that, or to at least tell them to think more about that, or to avoid it altogether, because honestly it's not the smartest move because nobody understands where they are in the platform, and I stand by that 100%. Okay, so now after all the napkin math suck stuff, here's some napkin math. Again, he did 100 or 298,000 in, he claimed 28,000. The compound number is irrelevant. A lot of these numbers are just what I used to populate on the new site, the bottom metrics on that, because again, we could not trust a lot of them enough to do the calculations. Claims was dead set, easy, with the exception of the inferred claims or the inferred compounds. So this one, 303,000. So we're going to do 303,810. We're going to subtract out that 28,507 in claims. So that brought his redemption value down to 275 at that point. That is above zero. And so there is the addition of the 20%. So times 1.2 gets us to that 330 number. And again, it is that simple on a newer wallet without a lot of different actions taken. So to back in a little bit, like I said, I know the exact amount this person put in because we've talked a lot about it. And so I know all of their numbers and all of their goals and what they were doing and everything. So they put in initially 298,000, and then they compounded that up to 303. So we're going to put their number at 298,000 right there. They're getting 330,000 back. We're going to say minus that 298,000 right there. So essentially at the end of the day, this person is going to make $32,000 in profit impact. Again, this is not a lights out number, but it's also not zero. And that is a real thing. And it's also not, hey, here's 30% of your money and see you later. Thanks. Right. Ultimately, in the end, and Scott's gonna talk about this a little minute too, that is available if somebody wants that, if somebody is ready, like, hey, listen, yeah, I see that's my new investor payback or my new redemption value number. I'm done. I don't believe they can recover this. That's literally what the instant buyout is there for, so that we could make those people that just said, give me the money that I have in here, that is still what I have, and I'll go away. Obviously, we're not going to force that on everybody, but that is an option for those people, and it will be done at zero tax to those people. It will be done specifically based on the difference in the protocol liability and the current farming TVL. And again, Scott's going to touch on that a little bit later too.
That number, JC, doesn't include the claims. It's backed out of it. So we'll have to
Oh,
include
you're
that
right.
total.
You're right.
Yeah.
Yeah. So to get the total number, there you go. Thanks, Scott. Okay, so we're going to start that math over again because I got talking too much and Scott pointed out my mistake there. So in the end, this wallet is going to receive their $330,000 payback, plus they've already received their $28,000 in claims. Okay, so we're going to take that 330, 363. We're going to add the $28,000 in claims that they already received for it. So at the end of the day, they're going to receive 358,000, not the 330 that I was using before. So we're going to take that 358, subtract his initial 298,000, so that's a $60,000 profit there. Then we're going to divide that by the 298,000 to get our percentage increase, and this wallet makes right at 20% at the end of the day. And again, these are not huge investment numbers, but it is their initial capital back plus some profit, which is the primary goal here, is to make sure that nobody, unless they took it into their own hands and sold for a discount on the marketplace, nobody has the ability to lose money in PACA. Scott, anything else you want to add to that?
Yeah, well said. I've been trying to say that from the beginning, and that's why the model was created this way at the end. I was very adamant about both the older users in terms of restakes and how they were being accounted for and all that. I was very adamant that the older users were being adequately, reimbursed and getting an adequate value, especially for the time they've been in the protocol. And the new users were getting an adequate upside for being new. And this is an example of someone who got in late. They got in June, I believe. They're going to end up with the 20% upside. They've already got some of those funds back in their pocket. And well, it's not a home run where they made ridiculous money, but it is a scenario where they can go, okay, that was a decent investment, right? I entered the money in June. In a minute here, we'll show you what the estimated days to completion are going to be before they'll get the rest of those funds. So over that period, that's a pretty decent return, I believe, for them. And so while it may not be the home run that they might have wanted out of DeFi, it's still solid money back plus profit, and then they can move on to whatever it is that they like to do. My goal in all of this math and everything we created, including the system that we're going to, that PACA is going to run off of, and then also the math and how we calculated everything, was to ensure that everybody involved, outside of them selling on their marketplace and taking a loss on their own account, or if they take the emergency exit funds or whatever it is, my goal is to make sure that every single person had the opportunity at least to make funds in PACA, make money in PACA, their initial back plus profit. And so if they just sit tight, they'll have the ability to do that. And that's what the entire system was built around. So there's an example of someone who got in late, weren't the beneficiary of getting in early. It's going to end up making 20%, which I think is decent, considering the circumstances.
Okay, so next wallet, very similar situation, had a little more time to claim. They got in a little bit more compounds. The first thing I want to show in this wallet, they were at 164,000, down from 255,000 on there, because again, they claimed a whole lot, right? But let's look at this compound number. That's only 7,800. Their claims are 118,000. I flipped this over to that initial run we did before I put in that fuzzy logic inferred compound. So this is a wallet that was directly impacted by that. And so we can see that dropped there by $6,000 and then increased their compounds. And so now they're getting 171,000. So we added money back for this wallet just by taking extreme care and fairness in how we did that.
Yeah. And I'll say, he says that in the initial run, this is iteration 10. We really went through every little thing and would decide, we're not accounting for something here. That's not fair to people. Let's go find where that data is. And we did it over and over again until we really found the clearest data available. So that's, this probably doesn't show all the fun stuff that we
No,
had.
it didn't. But that's
Yeah.
what I was going to touch, though. This is
Yeah.
why I had to create the shorthand that I created, so that I could make it in such a way that Scott could come in and play with numbers as well. And so there's formula cheat sheets everywhere. There's variables that can be used in formulas. Out here, it talks about the different helpers that are available and the vector ops that are available, min and max, cap multipliers. And so again, we basically created an entire new math notation for this, but all of these really are is just custom functions that I built to work within this specific data set. The vector ops are very simple: add, subtract, multiply, divide, max. Anyway, but we spent the week that we kind of nailed down the formula, and it still took us another week after that too. But Scott and I, we talked about it. I think we spent 40 hours on Zoom that week just building out different formula versions, bouncing ideas back and forth, trying to see what could be removed fairly, what couldn't be removed fairly. And in the end, this is the formula that we landed on, where we're taking the dashboard minus the claims and then adding the restakes back in there. There were iterations where we with subtracted the withdrawal amounts, subtracted the marketplace sales, but at the end of the day, those were not fair to subtract. And again, we debated all of this stuff heavily for a long time. And in the end, we decided that the marketplace sales and the withdrawal capital is already reflected in the original dashboard number. And so that was a big part of us going with that original dashboard number as well, because the only thing that is not reflected in that is the amount that people have taken out through claiming, and then putting the restakes back in on top as that sort of a bonus. So this was a good one. I'm not going to go through this one a ton. Like I said, the best thing to show here is that
I would say do that. Do we have, so in this in particular instance, I think it may be important to go, okay, so the dashboard number was high, right? What do you got, 255 there? It's a little blurry. So the dashboard number was high, but the amount of claims was, 112,000. So they really recouped a tremendous amount of their funds. We built back in the compounds, some of those funds thinking that they pulled out and put back in. And so while the discrepancy between the dashboard and the payback percentage is high there, they've really recouped a tremendous amount. So this person actually made pretty good money on their total investment. And ultimately, that's another example where we went and dug into it and said, okay, this is actually a pretty fair percentage that they've received back on their invested capital.
Okay, so these next two are going to be the more extreme examples, right? Like those examples are both pretty typical, right? You've got a handful of people that are getting over their dashboard number just because of the situation of their wallets. They came in late, they did nothing but compound and never claimed a thing. Situations like that end up over. Most situations are more along the lines of what this wallet is showing, where there's a good mix of all of the things here. And so they're going to end up down from their dashboard number. But again, ultimately, at the end of the day, that's 171,000 plus the 112 they took home already. And that's going to be their amount they end up receiving out of PACA in this deal. And again, nothing to write home about, but a good faith effort to get everybody their funds back plus make them home. So now let's look at extreme wallets. This wallet is one that ended up below zero in the calculations. We've actually had our eye on this wallet off and on for a good while here and sort of watching its journey along the way. This wallet ended up buying a handful of stakes on the marketplace, and buying those stakes on the marketplace was able to bring their total back above. I think it was down. It was never down to zero. I think this one was down to $56 in the end. And again, you can see why right here, right? Like we can do the math on this and see exactly how it ends up in the end. And again, they've withdrawn capital so that they've gotten other capital out of this, plus their claims on there. They've gotten some in marketplace sales. So this wallet is, yes, they're dropping a lot from their dashboard number, but they have received a significant return on the money they put into PACA already. And this just helps them get across that finish line to get their percentage back in some profit, right? And so again, we can just take that 27443, subtract out that 26494. So that gets it to 949. Send that to 1.2. So 11, that's right. This one, after the inferred compounds, that jumped this one up quite a bit too. So 1138 was their number there. We're going to add in the restake. So 3743. You can see where that is a very strong help right there to add those restakes at the end. And again, this dashboard number has come up because this person purchased a handful of stakes on the marketplace as well. And so they're getting those at the exact credit that we said would happen, with the exception of a few potential edge cases. And again, we are watching closely for those edge cases and monitoring that situation. One more, this one is a wallet that ended up at zero on the payback. And listen, guys, these are the hardest ones for me. It really is, because I understand this. This is a tough pill to swallow. But when you look at this whole wallet and all of the actions taken, this wallet has already sold a significant amount of their value on the marketplace. And so that made a big difference there. They've claimed $58,000 out already on top of that. They withdrew 7,500 in their capital. And then what this really shows, though, is just how hard this formula works to keep them available to receive something, right? And again, in this case, the difference in the dashboard and the claims after they sold all of their stuff on the marketplace, maybe recently, maybe a while ago, but that's just too big of a gap to overcome. But again, once this was negative, we did not add 20% multiplier to that to make it more negative. And then we added the restakes as the bonus on top. And unfortunately, even though that $30,000 in restakes is a large number, that is not a large enough number to offset the difference in those two in that case. And so, but again, in the end, this person brought home nearly 60,000 here, 7,500 there, and nearly 30,000 there. We believe that this wallet in the end would still be in profit. Again, depending on how much of this was discounted, we can't control that. If somebody gets out at a discount, they got out at a discount. And so in that case, it is possible to not walk away positive total, but that again was done through user actions of that. In the end, anyone that did not sell at a huge loss somewhere along the way, it's pretty much, not pretty much, it's impossible to come out of this with an actual total loss in paca if you stick in through the end of the redemption.
Correct. And I think I just want to make the point, like that was the goal. If we could make that possible for everyone, then that's ultimately, that's how I can sleep at night. I can't sleep at night not giving anyone a return on their funds. I can't sleep at night, giving people, taking big drawdowns for people. The thing that was really important to me and Lee and JC was to make sure that people got to the point where they were whole, had the ability to make money, and they can walk away with this going, I made some money. And so paca wasn't the worst investment I've made. The DeFi space is an absolute minefield of just wrecks one after the other. And so while this again may not be the biggest home run you've ever had, it's the ability to make money. So hang tight if you'd like, and through the end, and you will have made money in the protocol, outside of if you're not taking any actions from here, or if you haven't taken any actions to your detriment in the past. But I think it's about as fair as we could possibly make it, and that was the goal.
But and again, we literally spent probably 3 weeks on just the part of the process you've seen so far, and we're already an hour into this video, right?
Yeah.
To that end, Scott, why don't you kick off and talk about the forecasting model a little bit?
Yeah, let's bring that up. So let me bring it up on screen real quick. All right, guys. So here is we'll say that it's the forecasting projection model that we ended up creating. This is the final iteration of it. We did a million different updates to try to figure out the perfect way to make this. And I guess the forecasting that we're going to build into the actual protocol is going to come from this. This is what's going to determine the estimated time to completion. This is what's going to determine how much folks are getting paid back based on the farming rewards. This is the model that we built to be able to facilitate everything. This model has Monte Carlo metrics built into it, which allows us to run a bunch of different trials. And so what it'll do is it'll take the numbers that we put in here, and it will jam it into a system with some variables that are dynamic, because as you guys know, there's not just one perfect line. Everything works perfectly at the same time. So what this will do is scatter those variables around. It will give us an average outcome, a best outcome, and a worst outcome. And the reason that we landed on this model is because we were able to come to conclusion that this model would work 100% of the time. So there are other previous models we were just having too many where we would end up at a failure, right? Even if it was just a few percentage, the worst case scenarios would the model would crash and it would fail. I did not want to have to redo anything for paca in the future. I wanted to build a model that will get us to fruition. Now, it may be a few extra days if a variable goes one way or another. It could speed up, it could slow down. It's really dependent upon what the market gives us, but we will get to completion. The variables now aren't will it live, it's how long is the estimated days to completion. A little bit less, a little bit more, just depending on how the markets treat us. So that's what this model does. And the back end of paca, really on our admin dashboard, which we'll show you later, this is how we make this the determination of exactly what we're going to plug in there and what you see on the front side. So let me just show you exactly how it works, and I think it'll make a lot more sense. So starting treasury right now, like I said, it's about 5 million. That's variable. If the market pops, it'll go up. So this is roughly what we have right now. Total obligation that we just pulled on the numbers about 18.6, a little bit less, but that's what we have here. The next section is for daily earnings. Now, daily earnings are dynamic, so they could go. We could have negative days, frankly, right? Or we can have positive days. We've got a little rate mix in here, and I can show you. I can show you both. We'll play with these numbers to kind of bring down what the average will likely be, but I want to show you the variables and kind of what it looks like here. Payout intervals, that's going to be roughly 15 days, right? We're going to run this epochs or these pay periods on the 1st and 15th of every month, just to keep it super simple. People aren't going to have to go, hey, is this Friday the payday or is it the following Friday? 1st and 15th, everyone's got a 1st and 15th worldwide. And so there's no variables there. The percentage that investors will get paid out in their earnings that they're going to be able to go in and claim from their value is going to be 40% of what's earned. So the rest of it's going to go back into the protocol, and those larger farming positions will be able to earn more, which will speed up us being able to get everyone paid back. So 40% of what comes in is going to go right back out to investors. The rest of it is going to be compounded into the positions. That will probably be pretty static. We've run a million different models on how we can swing that. It's fairly negligible on the amount of days, and so having it fairly set is probably going to be about 40%. We can increase it later over time and pay you guys out a little bit more, and maybe have some of those later payments be a little bit larger for you. But we'll get to that here in a second. Marketplace discount, we're just going to put in an average discount that people are going to offer. We can throw that in at 35%. That just allows us to forecast out. We know there will be marketplace sales, so if we can forecast those out, it will give us a better estimation of days to completion, right? So we'll add those in there. We have the ability to change rates. We have the ability to infuse capital. So as we're getting payments back from Cetus, I can come in here and say, okay, in 30 days, we got an additional $20,000 coming back from Cetus as a payment, or any other variables that we have, or we have capital infusions that we know about. Some investor really likes paca and they say, I'm going to bring in 50K and we know about it. We can plug that in here and say, okay, fresh capital is going to come from so-and-so who wants his 20%. He's going to go and do a marketplace buy. We can factor that in if we want to really try to dial in our estimation. Early exits, undoubtedly, some people will want to get out of the protocol right away with whatever's left, and you'll get paid in the relationship of how much funds you have in the protocol to how much we actually have in farming value. And so that will be dynamic and will fluctuate. We'll update that on a regular basis, so you'll have the ability to look and see what your early exit percentage is, whether that's 30% or 40 or 50%. It will increase over time, but you'll be able to decide at what point you feel like, I want to bail and just take what's left. Some folks right out the gate will go, I'm already ROI'd. Actually, I didn't know that, but now that I can see my data, my return on invested capital is already positive. I'm just going to take 30% and walk. Or they may try and list in the marketplace. There's a bunch of variables. Everyone will react different. What we want to do is have the ability to forecast more accurately what happens when that happens and how many days left to completion, so we can share that data to you and be super transparent about really where the protocol's at. That can go one way or the other. We may speed this thing up and it's going amazing and that the days slim down, or if the rate of return that we're receiving just isn't as high as we expected it to be because the market is flat and there's no volume or whatever it is, then that may expand. But we want the ability to be able to show you even this calculation in real time at any time and say, here's where we're at, here's the estimated days. And so this is where we're getting the number. This is the math that's happening to get the number to be able to put on your dashboard. So we're not just winging it and going, yeah, let's say 350 days. And that's the number that we think we're going to be able to plug it in here with real-time data. So early exits, what we have built in here is just, we'll say 10% of people want to bail month after month. So I've just built those in here up to 210. Marketplace sales, same thing. We just figure people will sell over time and get out of it as they realize they're at ROI, or there's a new shining opportunity, or they just need the funds for something. So we have that built in here. And then we can add any additional metrics that really make sense to have, so we can ensure the accuracy of our number to the best of our ability. we're running this 10,000 times. So basically what it's taking is it's taking the variables of all the situations and scattering them a little bit from the median. And so some deviation in the model. And so it's pulling us in a few different directions. And we're going to be able to see when we run the simulation, 10,000 different versions of how that calculated it. And then the average, the most average is what we're going to report when we tell people the estimated days to completion.
And
But
just to put a little bit better visual on that one component, the 10,000 test, if you
yep.
scroll back up to the daily returns. So right here on the daily earnings from farmings there, even though nothing works daily moving forward, this is still how the model works because that's how it worked when we started this model. But that 10,000 runs, what that does, this is what Scott's talking about. One of the places that it scatters that makes a difference in the scatter, right? And so sometimes it's going to use that negative 0.1, sometimes it's going to use that 0.5, sometimes it's going to be somewhere in the middle. It's going to average out somewhere in the middle because that's the overall goal. But it's much better than saying, oh, yeah, we think we can earn 0.5% a day or 0.55% a day. It allows that to get some of that fuzzy logic in there and test 10,000 different situations of running those variables different times throughout. And then again, coming up with the most accurate forecasting model that we could build.
Yeah, as accurate as possible. And let's be honest, some days where the market cranks, we're earning way more than this. And some days we could be negative. So we wanted to make sure we built in that variable. So when it's running those 10,000 different versions, it's picking days. Like some of those versions will have more negative days. Some of them will have more positive days. And it spreads that out and aggregates all the data for us and just gives us the likelihood of success. In this model, we built it variable enough to where there's always success. The variable is how many days does it take to reach final success. And that's why paca works like this now, because I again did not want to reboot this system because we made a mistake here or made an assumption that we could reach a certain percentage. If the markets have showed us anything this year, it's nothing like last bull run, and it's nothing like even pre bull run. A year ago, the markets were reacting better for farming than they are today. They're all over the place. There's certain scenarios where you're farming the same ranges and they're just not paying the same percentage. So I wasn't comfortable making any assumptions. This spreads all those assumptions out, gives us an aggregate of the data, and that's as close as we could get it. So hopefully you guys can appreciate why this took us so much damn time, because it took a lot of time to come up with all this stuff and just try to be as accurate as possible. And I would have rather drug my feet making sure this data was correct than launch something that was ultimately going to fail because we didn't do our due diligence. I mean, that's, I'll take responsibility for not doing as much due diligence in the past for a couple of the variables that we spoke about earlier. But going forward, that's obviously not going to happen. So I'm fine to have a few uncomfortable people in the chat and have some conversations that aren't as comfortable to make sure that this is right and make sure people have the ability to actually make money in paca. So in the end, if you wash everything out, mistakes were made in that first version by different people and different investments that we tried to make, or tokens that we jumped in, or dexes we were on, or whatever. The whole aggregate was we could have done that better in hindsight. Obviously, hindsight's 2020, and the new version of it is all this new math is proven out to the nth degree, and the new model should work great, and everyone has the ability to leave with funds. So I know everyone's going to share their, the people that love us are going to share all the positives that we've done. The people that hate us for whatever reason, they're going to share all the negative one-liners. But if you can walk away with just 3 one-liners, we make some mistakes in the previous model. We did an incredible amount of math to make sure this new model would work. Every single person who stayed in the protocol will have the ability to walk away with their initial funds plus profit. So if you want 3 taglines to throw up on Twitter, those are yours. So here's how the model works. Let's run it and I can talk through some of the details. So if we run the simulation, and it may take a quick second. Okay, populates the data. It shows the starting treasury, liabilities. This is kind of just a scenario, a summary of the full scenario. Days to solvency up here is where you want to see it. I slimmed the numbers way down to the max daily earnings only being 0.55. So I pushed it all the way out to 673 days. you'll see if I play with these variables, and like if I were to put this on what we think our average will be, which will be higher, then you'll see this number of days slim down. But let's just take a look at the data as it is for now. The Monte Carlo distribution shows worst case scenarios, best case scenarios, and the average. So this is just this curve right here is showing the days to solvency based on all those worst case scenario, best case scenario, and then the average in the middle. Outcome, this section, run outcomes, we probably don't even need it. We always know that we're going to reach it based on this model. Outside of the market just getting eviscerated and there's no funds, the crypto goes away is essentially what would have to happen. Farming would not be available to do. That's the only way this model can truly fail. It will just take longer to reach completion if even if we saw some black swan events. So most average, you've got your best run, your worst run. The reason for these little breakdowns, this little stair stepper deal, is because we are averaging the obligation over time and saying that all marketplace buys and all emergency exit withdrawals or whatever, or all those early exits, they all happen on the same day at 30 days. So it's basically saying every month we see these drawdowns. What's really going to happen is that's going to be very smooth over time. And you're going to see people exiting the protocol all the way up until almost the last day. As the protocol gets farther and farther along, the early exit opportunity is going to be higher and higher. And so people will have the opportunity to go, I can walk with 70%, 80%, 90%. And a lot of people are going to take that toward the end. They're going to go, I know we only have so many projected days left, but if I can take 85% of my funds right now and walk and go get into such and such protocol that I want to do, or invest in this real estate opportunity, whatever it is, they're going to do that. So we're going to see real gradual slopes over time, but we'll make those estimations as we go. This number is going to get tighter and tighter. This is just the recovery. This shows the average run and the variables. So this is the difference between all those different variations of the model of the days we're making profit and not making profit, up and down. You know, this one's showing we made 9,800, up here 13,000. So up and down, it just shows all the different variables of all the different runs and shows how things can be different. And in the likelihood, we'll probably average a little bit better average week over week, but that's how it'll work. Checkpoint metrics here really is just going to be your offset for your liability. So as time goes on and our liability or our treasury increases in relationship to our liability, then you're going to get a higher payout, and this will change. So obviously, like I said, like 2 days ago, this was more like 6 million. So if we make that increase and then come and do the runs, that run simulation will change these metrics significantly. And so that just jumped up by like 10%. You'll also see that it dropped us down to 560 days as the estimation. If we were to come in here and tighten up this math a little bit and just say, I mean, we know right now that some days are going to be negative and some days will be positive, really even a lot more than this, frankly. 0.55 is good, but we'll have days that are 1% or more, just because when the market's heavy and a lot of transactions are happening, those days print, but we're looking for averages. But if we were to say, 0.3 to 0.4, which is not an unreasonable average, and we were to run these, it would give us an estimated days to completion that is 356. So we're right at about a year. So when people are looking for, hey, roughly how long do you think it's going to take? Not financial advice, because the market's going to do what the market's going to do. This may be a reasonable explanation of the time frame that you may want to look for. What we're going to do, though, is every week, or even more often if I need to, I will update the estimated days to completion, because that estimated days to completion and the treasury balance at that time will dictate the payout for the early exits. So that will be constantly updated in real time. Because that's updated in real time, we'll have data points and we'll be able to track that over time. You started at 450 days, and then after a couple of those payout periods, it started to reduce. We'll be able to track that over time and give some real-time data of and historical data of like the last couple months of this new version of paca running. So I think people will be able to see the progress. When people see the progress, they will either have more faith in the protocol, that they'll look for those marketplace buying opportunities. On the other hand, people will see that it's going really well and that we have more treasury value and farming value in relationship to what their piece of the pie is and their liability, and they may take their exit at that point because it's good for them. So the clarity of the data and transparency of the data will be there for you to make those decisions, so you can make informed decisions on what's really there. And I think that's ultimately what people have wanted, and we just now have the ability to do it in this manner. So did I cover that all, JC? Okay.
Yeah, I do have one more thing I want to show on here. If you'll scroll down a little bit to the actual TVL versus liability chart. There we go. Okay, so I talked about this in chat several times, and it was honestly one of the hardest things for me to visualize until I got into this process a little bit deeper. Proud dad moment here. My oldest son actually was heavily involved in helping with a lot of the math and the forecasting model, and he is actually the one that built out this UI for us to use while I was working on some of the other areas there. And so, huge shout out to him for being huge help through this whole process. So again, I was not heavily involved in this half of it. This was a lot of Scott and him working together. But the thing I want to highlight on this graph is right here on the far right edge, we see this huge drop right at the end. And so the part that I had trouble visualizing, I was like, man, this is going to feel like forever because we're going to get these small trickle payments out until our balance is zero, right? And to that end, everybody's going to get this. Everybody, if we did it that way, everybody would hit zero at the same time. But this really shows visually how that works. When the pink line and the blue line meet right there, we still have $8 million in TVL, around just over 8 million in TVL at that point in liability and actual farming TVL. Was that?
Yeah, it's
It
over 8
drops.
from
It
here.
drops.
Yeah. Yeah.
But either way, what that represents is at that time, there will be an opportunity for a 100% instant buyout, as long as things are going well during that instant buyout period. Because, like Scott said, that number can fluctuate near daily if needed. Again, we were just talking about, taking $1 million hit one day. That's going to change the instant buyout percentage to do that. But the main point here is I wanted to focus and show that this is not a race to zero on that redemption value. This is a race to treasury equals liability. And then there's the ability to take the full remaining amount in one fell swoop. Or again, like Scott has mentioned, leading up to that period, maybe they're feeling really good about this model, really good about the markets, and we want to make a few small adjustments and turn this thing a little bit different direction. We can make that decision at that time. That is not currently in the roadmap, but it is not a hard thing to do if that's the decision made.
Yeah, let me hit a couple of those points real quick because I think those are great. JC's son's a genius, so that's super helpful. As far as the mathematics and being able to plug this stuff together, he and I went back and forth on a lot of this, and it just incredibly sharp. So big shout out to him, and to be able to put this together in a way that not only we could figure out the math, but also visually show people. And so for my own purposes, be able to use this on the back end as a tool to constantly be estimating days to completion and viability of the platform, and then be able to use it, going forward to be able to put it on the front end for you guys, so you guys can kind of see what I'm talking about. It was extremely helpful. So yeah, major help. That helped infinitely, and really helped make it all possible, because when it's one thing to theorize whether something's going to be successful or not and put all the data together and try to run some numbers. It's another thing to be able to run it through a Monte Carlo and try to break it as much as possible. And please believe us that we came up with models and broke them over and over again. And my thing that I was really stuck on was create a model that can't break. And so this is what we got. The visual is fantastic, and we can tweak any of these numbers at any time to really get a realistic model. So that's super helpful. To JC's point, we're going to get to the point where, because we're paying out 40% of that of what we're earning throughout the days on the ROI, the treasury is going to continue to swoop up a little bit in this slightly upward fashion from where it's at to where it ends, as we're paying people out throughout that process. There is going to be the ability to take one big lump sum payment at the end, or 100% buyout, or we can transition it over into a protocol that could stick around because the model will work. What's probably going to happen is I think we're going to have a lot of folks that, don't want to be here. And that's, their own decision, maybe get out during this period. And some folks toward the end may go, man, we love it. We love the model. We'd love it to continue. Can we have the option for it to continue? We will have the ability in here to kind of start making some decisions, talking to you guys about that. Do we continue it? Do we, how do we continue from here? And then we'll just leave that buyout open to where at any point when you need your funds, you can request them at 100% payout. So if you're wondering what happens toward the end, we have some flexibility. Let's get there and then have some discussions. We have the ability to keep the protocol going if everyone's liking the model. We have the ability to just make a big fat lump sum payout and everyone can walk and do what they want to do. But that's how it works. You will get, it will start low, obviously, because the discrepancy between the two, it will chip away over time. And then eventually you'll end up with a very large payout toward the end, whether you take it yourself or whatever. But that's how the math works. And I think JC covered it well, better than I did.
It's very mathy.
Yep.
We were not kidding when we said this was going to be an extremely math and numbers heavy video. This is what we told you were getting, and now we're an hour and a half into it, and I hope most of you are asleep.
Yeah. I'll say too, like we didn't want to add it in the last one because we thought it would be too much information at once. I know everyone wanted all the data. And two, this is the simplest version we could come up with. I mean, we could have definitely gone down more rabbit holes and just made it more complex, but we wanted to make it robust enough, but also have people to be able to just even understand where we went down. Because like JC said, we spent the weeks we spent on making sure the math was right and doing the models. It was intense. And so, but we're confident in what came out of it. And while this whole process hasn't been fun in terms of the emotional side and the impact on investors and all that, we have really enjoyed the process of going through and building this, knowing that we did it in the right way. And so there's at least some upside to it from personal experience. I know JC, you feel the same. So
yeah, absolutely. And it is. It's been a fun mental exercise. We just heavily wish it was being done in a completely different circumstance because, again, we're feeling this as much as every investor. My dashboard numbers dropping pretty significantly personally too, right? And we're all feeling this just like everybody else, and we all hate it as much as anything, right? But it was a good mental exercise. And I said this in chat the other day, honestly, I'm just happy that I've been able to participate in something that can be done for the community moving forward as much as anything else.
Yeah, it's been major. You and I and Lee are all immensely invested in this going well. We have friends that we brought into the protocol. We have family members that we brought on the protocol, and we're also invested ourselves heavily. And that can't be said for everyone. So if we could go back and do it all over again and set up paca this way from the beginning with the tools and the capabilities and stuff we have now, we obviously would. The important thing is when the issues were found, we paused, reevaluated, recreated the system into a way that it worked, and then built something that's sustainable to the end, and everyone can walk away break even plus profit outside of the folks who have exited themselves. So to me, I think that's about as good as I could have done. I know JC, the brunt of the criticism should 0% fall on you because obviously you joined later and helped me fix the problem and plug the holes in the ship. So yeah, nothing but thanks to you. I want to make sure that any criticism and frustration is expressed toward as team members now, both Lee and myself, because that's where it belongs. And everything going forward, this was possible to rebuild because of JC and Lee and I, and all just kind of banding together to try to make sure we got this fixed in the best way possible. So that's where we're at.
Scott, we've actually got a little more math to cover, but let's skip it because we're already at an hour and a half. Just to let everybody know what we are skipping in the math. And again, we said there's a lot of math to cover. We were going to go through the profit on the epoch math and then the marketplace math, which neither one of those need to be done right now. The epoch math literally is based off of the distance between the blue line and the pink line in that chart right now. And if that distance gets closer together, so there's a decrease in the distance between those, that represents profit. If it does not, then that represents not profit. And that was the most fair way when you constantly have coming in and out of that farming TVL, instant buybacks, having to move it around and do different things. So at the end of the day, we will have one process for getting that total farming TVL number. And then again, the liability number is easy because it's built into the system. And so that process will be the same from epoch to epoch so that we can continually track the distance between those two lines and whether that was a profitable week or a non-profitable week.
Yeah, and that's something we'll show you on the next one.
Yeah,
Like we mentioned in the beginning, we think that if everything goes smoothly, that we can actually launch the protocol a little bit earlier, and that'll give us the opportunity to talk about the epoch math, because people will be getting paid out, soon after the relaunch, and then it'll give us the ability to talk about the marketplace math, which will be relevant at that point. So I think we can get to that then. This is probably enough for people to understand. I think the main point is people wanted twofold: to understand where we were really at, a little more transparency on how we got here, which I think was well covered, hopefully, and then the math on how we came up with the the total redemption value that people are going to be credited on the dashboard, and then how we were actually utilize that math to go forward using this. So I think it's probably enough to help you guys understand how we got to this point and how we're marching forward. And then on this next one, we'll explain a little bit more about that epoch math, the protocol. We'll be able to click some of those buttons more live, and you guys can really see how it's going to work. But I think it's going to be slick. I wish we could have built something like this the first time around, but everyone wishes they could rewind time and make different choices. So it is what it is.
And this has been enough to make everybody's head spin. And also, don't get onto me for that. You asked for it.
Yeah, very true.
One last bit to that transparency moving forward. I'd mentioned in the chat several times, we are building transparency tools. There will be a dashboard on the site. I've already built it. It'll be there at launch, even though there are not epochs to show, but it will show that epoch to epoch progress with the total number of days on a chart, with that treasury versus remaining liability. It's going to look very similar to that middle graph right there. All of that will be shown on an epoch by epoch basis. We're going to work to do a little bit more position tracking transparency, things that Scott and Lee had been told were not possible in the past that are in fact very possible. And so we've already started working on some of that. Actually, my son and I have already been doing that for several months, just on our own positions and things like that. And so we're going to bring a lot of our technology for that over into paca, so that, again, we can create very much an air of transparency around everything at this point, and really show the details of where we are in the recovery and what is happening to get us there.
Yeah, and since the whole model is built on the ability to take an early exit at any point in relationship to what the TVL is, like you'll need that transparency to be able to make your decisions, and I need that transparency on a real-time basis to be able to set the buyout rate at what's reasonable, so it doesn't end up hurting the protocol and it's just net even. So all those are super vitally important. Obviously, the capabilities that we have now, since you've joined the team, is significantly increased from what we had before. So we can do a lot of the stuff that we've always wanted to do, and we can do it, much faster. So that's where we're at. I'm excited about the direction it's going. I hope people will let us get this migration done. We'll be able to push the updates out so you can see your numbers, and I hope people will objectively look at the amount that they put in, and then the amount that they're going to get back, and how much they've already taken out of the protocol and sold in the marketplace and all that. I hope people will objectively look at their numbers and go, I've actually made okay money. I'm glad they fixed this. I know it's taken a little more time than I wanted to, or it's not as much money as I wanted it to be, but I'm walking away with this with a reasonable amount of upside. And hopefully people will be, peaceful in the chats, knowing that it's an amicable resolution, considering the circumstance that we ended up in.
And there'll be lots of both ways, but let's just try to keep it more calm, because again, at this point, like we've said several times, the math is baked. It's all there. We are starting this migration process right now. While you're watching this video, we are already working towards planning to reset the contract, start the migration process. Nothing's changing at this point. There are no single wallet exceptions. We are not going to go in and manipulate any data. We've had several ask if we can move things to a different wallet. Again, we're not touching the data for any wallet at all. It's just more than needs to happen and should not happen. We're going to do a direct migration of all of the data. Again, keep everything as fair and straight and level as possible.
Yeah, that's a fantastic point. I hate to say it like this, but at this point, it is what it is, guys. We've done everything we can, as you can see from the prior math, to make it as fair for everyone on an equal basis as possible without damaging one side of the investors or another group of investors. This is as evenly fair as we could spread it. And then also as much as we could pay to make it a reasonable amount so people are getting a decent return in the end, and found a way to make it the most sustainable as possible. And it's looking like get people paying back in what's a reasonable amount of time. So all things considered, it is what it is, but I think it's fair. It's not ideal. It's not perfect, but it's about as good as we can come up with. So I hope you guys can appreciate that. And then, be kind to the admins and stuff like that in the chat, and be kind to each other. Everyone's got a different opinion about stuff, and everyone's circumstances are different. So they're, needing to pay for one thing or another. So I'm certainly sympathetic to everyone's concerns. 100% I am. But let's be kind to each other and realize the circumstances you're in, and do the math and realize that you're coming out of it okay. It's a bit different than you thought it was going to be. And I can respect your frustrations around that, but this is where we are.
Awesome.
So awesome. Well, that's it for today's recording. Again, like you said, we're going to be in the middle of the migration by the time you watch this video, probably. So we'll bake the data, we'll pull all the new snapshots, make sure everything's clean, including anything that's happened on the marketplace, and then shortly after that, we'll start giving you updates on how the migration's going, and when to expect you to be able to view the site, look at your numbers, kind of poke around a little bit, and with any luck, we'll be relaunch prior to the end of the month with a couple extra days, variable days for you to poke around, and then we'll look forward to that epoch. So, all right, guys, thanks for joining, and please, if you have any questions, come in the chats and ask them in the best, most respectful way you can. We're happy to answer. So, thank you, guys. Take care.
Thanks, Scott.